So, good evening once again. Today, the topic that we want to look at is IS 33 any per share. And then under this IS 33, which is the any per share, we are going to look at the benefits. That's one of the things that we are going to look at, benefits of EPS, which is any per share. And we also need to look at the limitation of any per share, limitation of EPS, and also we need to what's it called? Look at the examples of any per share. What again? We also need to look at the what's it called? Types of any per share. Then finally, we look at the application of what any per share, how we are going to apply them. So when we talk about the benefit of any per share, is that we are using the any per share to measure financial performance. That's one of the benefits. We are using the any per share to measure the financial performance between the entities. So we only use the any per share to measure the performance between the two entities. Another thing that we can also think of under the benefit of any per share is that we can use any per share as well to assess the profitability performance of the entity over time. We can use the any per share to assess the profitability performance of entity over time. That is, we can use it to assess the profitability of the company over time. So we said earlier that we can use the any per share as a measure of financial performance between the two entities, that is between the two companies. And then also we can use it to assess the profitability performance of the company. And not only that, the what's it called? The any per share, it is important in terms of the price. It is important in terms of the share price of an entity. So any per share also important, that is give impact on what share price of an entity. Not only that, we can also say that the any per share, we can use it to forecast. You can use it to forecast the what's it called? The future profitability performance. Profitability performance. So any per share, we can also use it to forecast the future profitability performance of an entity. So so this is what we can say about what the benefit or the importance of what any per share. Are we there? Hello.
Yes, we are. Yes, sir.
So when we now look at the limitations of any per share, we can say any per share, because if something is have like a benefit, the importance, so we can also see from the angle of, is there any limitation for this any per share. So the aspect of what we can say that any per share has a limitation is that for historical, do you get my point now? It is historical in nature and may not be what suitable in future prediction, because any per share has to do with historical, So if any per share has to do with historical, automatically it will not be suitable in what? In future prediction. And don't forget that initially we mentioned that one of the benefits of the any per share is that of what was it called? Is that of we can use it to predict the future profitability performance of an entity. But definitely there has to be a restriction because of the limitation that any per share is a what? Is it is historical in nature. It is historical in nature, and because of that, we cannot use it for what? For future prediction. That is not suitable in future prediction. Are we there? So another thing that we can also think of under the limitation of any per share is that of it can easily mislead. If the impact of what? Inflation is not considered when we are preparing the financial statement. So as a result of that, the any per share can mislead, or we can say maybe mislead if the impact of inflation is not considered. If you don't consider the impact of what? Inflation while preparing your financial statement, then any per share may result to what? Misleading. So it's one of the limitations that we can also talk about. So any per share, it is also subjected to what is called window dressing and the creative account as a result of what? Financial manipulation. So if we mention window dressing and the what was it called? And the creative account is that when you are trying to doctor the financial statement, that is, you want to manipulate the figure. That's what we are referring to as what? Window dressing. That if anybody say this financial statement has been window dressed, it means that you've manipulate the figure, or you've doctored the figure. That's what leads to what is called creative accounting. So one of the limitation of any per share is that it is what? Subjected to what? Window dressing and what? Creative account as a result of a financial manipulation. If there's a financial manipulation, it means that the financial statement has been what? Has been window dressed and what? Creative account. Are we there? Hello? Hello?
Yes, we are here.
Am I talking to one person?
We are here.
Okay. So another thing that we can also think of under limitation of any per share is that any per share, it is not a complete truth. So as a result of that, you cannot use it for what is it called? Investment analysis. Because when we said any per share is not a complete tool for investment analysis, and as a result of that, it cannot provide information on liquidity position of the entity. So it's like when we are talking of the ratio analysis, we can use ratio analysis as what? As a complete tools for investment analysis. So you can use ratio analysis to provide information on the liquidity position of the entity, of the company. But any per share cannot do that, because it is not a complete tools for investment analysis. So that is the difference when we are looking at the ratio analysis compared with the earning per share. So ratio analysis is a complete tools that you can use for investment analysis in terms of when you are trying to provide information for liquidity position of an entity, but earning per share cannot do so because it is not a complete investment tools. Are we there? Hello.
Hi.
Hello.
Hi.
Okay.
We are with you.
So another thing that we can now think of is this example of earning per share. Number one example of earning per share is that we have what is called a basic earning per share. We call it basic EPS. Basic EPS, that is basic earning per share. And also we have what is called a diluted earning per share. We call it diluted EPS. Diluted EPS. So these are the types of earning per share. These are the type of what earning per share, earning per share, earning per share. These are the type of what earning per share. I repeated this. Sorry. So types of what earning per share. We have basic earning per share and we have diluted earning per share. Diluted earning per share. So and the last one is the application, how we are going to apply, So we need to talk about the application of what the earning per share. So the application of earning per share, according to what's it called, IAS 33, according to IAS 33, because IAS 33 is only applicable to companies that are listed or quoted on the stock exchange market. So that is what IAS 33 is talking about. So it's only applicable. So when we say IAS 33, we are referring to what earning per share. So earning per share is only applicable to a company that are listed or quoted on the stock market, on the stock market, on the stock market. So that's the what's it called? The application of it, application of IS 33. So IS 33 is only applied. So you have to take note of that. So IS 33 is only applied to a company that are what that are listed or what or quoted on the stock market, on the stock market, on the stock market. So because of that, excuse me. Sarah Ojo, go ahead. Ask your question, please. You raise your hand. Madam
Can
Sarah.
you take that last part? Yes. Can you take that last part?
Okay. I said application of earning per share. I said according to IAS 33, which is earning per share, it is only applicable to a company that are what that are listed or quoted on the stock market, on the stock market, on the stock market. So any company that is not quoted, any company that is not quoted or listed on the stock market that chooses to disclose earning per share do so in accordance with what IAS 33. So any company, if your company is not quoted or listed on the stock market and that company chooses to disclose any per share, so that company only do so in accordance with what with IAS 33, with IAS 33. So that is what application of any per share is talking about. That is only applicable to a company that is what that are listed or quoted on the world stock market. Are you getting it now? So let's now look at the practical application of it. Examples. Example 1. Adeyemi are we there? Hello.
Hi. Go on.
Okay. So Adeyemi had outstanding. Adeyemi had outstanding ordinary share of 10 million naira of 1 naira each. On 1st January 2017. The company makes up account. The company makes up account to 31st December every year. Every year. The following shares. The following shares were issued. The following shares were issued. Following shares were issued during the year. 31st March 2017, 1,500,000 ordinary share. Ordinary share of 2 naira each. July 2017, 31st July 2017, 450,000 ordinary shares of 2 naira 50 kobo each. Are we following? 31st
Yes.
31st October 2017, 600,000 ordinary shares of 3 naira each. Required. Calculate the weighted average numbers of shares outstanding for the year 31st December 2017. B. Calculate the basic EPS if the company profits after tax is 2,500,000 and a preference and the preference dividend of 375,000. So are we set?
Yes.
Okay. So what we are going to do is that we want to calculate the weighted average number of shares outstanding for the year 31st December 2017. And if we are to calculate that, you look at the existing shares. What I mean by existing shares is that before the new share was issued, you can see the following share were issued during the year. So these are the new share that was issued during the year. So the existing share is talking about the 10 million of 1 naira each. That is ordinary share of 10 million naira of 1 naira each. So that is why we say that one is outstanding. Then that one is called what? The existing shares. So we need to calculate the existing shares first, and also now calculate the new issue. So by the time you do this, you've already gotten your what? Your weighted average number of shares. So we have series of approach, but the approach that I'm going to use, we have two approach. So to me, the two approach is simple, but the one that I believe that is simple most, I will use that one. Do you get my point? So if we want to calculate it, we calculate as per the heading. We say calculation, but let's do our usual way of solving question by putting the name of the company Adeyemi, then calculation of weighted average number, as it is weighted average numbers of shares Then the existing shares, we can write our existing share. What is our existing share? Are we there?
10 million naira.
10 million shares, not naira. existing shares is 10 million shares, because you see that they are giving you 10 million naira of 1 naira. So 1 naira divided by 10 million naira will give you 10 million shares. That's the meaning. So the existing shares, it is 10 million shares. So if I do this as my normal approach, which is the simplest approach, I would just say, because everything is 1 year, as at December, then I will just multiply this by 12 and also divide it by 12. So I'm getting the same thing. So I'm getting the same 10 million as my existing share. So no need of saying you want to multiply by 12. The person should move, please. No need of saying you want to multiply it by 12 and divide it by 12. Because even though if you do that, you are still going to get the same 10 million. Do you get my point?
Yes.
So number of shares. Then you now think of the existing one. We've already think of the existing one. Then we now look at the new shares issue. The new share issue. We think of the new share issue for 31st March 31st March 2017. That's the new share. New issue. That's the new share that was issued. On which date is that? On
31st March.
31st March. Then, as I doing it, to
Maybe
just
we've lost your
calculate,
screen.
is that what?
Seems we've lost your screen. Am I the only person? I can't see your screen anymore.
My screen is visible. Is my screen visible?
To me, I can't see your
Yes.
screen. So that's why I asked if I'm the only person.
Maybe it's your
So
network.
if maybe it's your network, you can log in. If you now go to the first one, which is 31st March. No, this 31st end of March. It means that you cannot count from March because it's already ending of March. To start counting from April. So if you count from April to December, how many months is that? June,
9
July,
months.
August, September, October, November, December. That is 9 months. You now say 9 over. Was issued out in March. 1.5 million shares. Are we there?
Your screen has gone.
Something is wrong with that. That's the first thing that happened. The thing came back, went again.
To log out and log in. The network is not good or just smooth.
Am I the only person? I'm still not seeing your screen again. It has gone now.
I can see it too. I think it's
Okay.
network.
He has left. Ibrahim is out of the call. God. It's like Ibrahim's network is bad.
At mobile, we are waiting for him and he has not spoken.
Alaji, do on your camera. Go and call Ibrahim.
Raji, ẹ bá wa pọ̀ gá wa o.
Today I want to be serious with my life. God, why?
Just now, you have started tonight again, Abi.
You said what?
You have started today, tonight again, Abi.
Okay. Better be calming down, sisters, so that you will not come and be say you not sleep. I don't want to hear me sumioti sumioti. So if I hear pere,
Now, is it clear work? Oh,
The record is going on. Oh.
eh?
record going on doesn't add anything to us. The essence of the record is for the thing to consider. So it's better that I stop and just pick it up again.
So, for this network issue, so can you hear me now?
Yes, we can. Oh, yes, I can.
Okay.
Yes, I do.
So then I think I asked this question that I don't know, maybe you get it up to this point, that the new issue on 31st March 2017, it is 1,500,000. And I said, since the March is already ended here, which is the 31st March, then you start counting from April to December, because we are told that the company make up account to 31st December every year. So that is where they make up their account. That is the way, the period that the company choose for the accounting period is what 31st March every year. So if the new issue was issued 31st March 2017. So that month is gone already. So then we now start counting from April to December. So and if you count that, so then you obviously you count for nine months. So 9 months multiplied by the number of shares issued on that period, 1,500,000 shares. So how much do you have? If you prorate it to number of shares based on the average. Hello. So what do you have,
Hi.
please? Can you prorate and give me value?
1,125,000 is what I got to. 1,125,000.
Then we go again and look for the second one, which is 31st July. So new issue on 31st July 2017. Then if you are prorating that one, based on my explanation now, how many months are you prorating?
5 months.
5 months, correct. So 5 divided by 12 multiplied by number of shares, because July has gone, which because it is ending, then you start from August, September, October, November, December, 5 months. So what is the number of shares? 450,000 shares multiplied by 450,000 shares. So what do you have?
187,500.
187,500. Then we look at the third one, new issue on which period? 31st
October.
October, October 2017. So based on the explanation, how many months are you prorating?
2.
32 over 12 multiplied by number of shares. Then what do you have?
100,000.
100,000. So then you now cast everything from up from that 10 million shares. So once you cast everything, whatever you get is your what's it called? Weighted average number of shares. Weighted average number of what shares. So what do you have, please?
11
11
million
million.
41500.
11 million.
412,500.
Okay, 500. So this is what the question is asking you in A part. So the B part say calculate the basic earning per share if the company profit after tax is 2.5 million and a preference dividend of what? This. So the B part of it is that EPS is equal to earnings, or we say profit after tax. It depends on what the examiner is giving us. Are we there?
Yeah.
So if the examiner is giving you profit after tax, you can say profit after tax. But if it's the same thing as earnings, because as the name implies, so that I want you to understand the formula. E is earning. You can see earning per share. That is earning over number of shares. That's the meaning. So if the examiner is giving you profit after tax, it's the same thing as earning, but they now said and a preference dividend of what? So earnings less preference. You can say any minus preference dividend. So if the examiner is giving you preference dividend, then all over number of ordinary share. So but this one will now be weighted average number of shares. Weighted average number of shares. Are we there?
Yeah.
So we can now move on and say what is our earnings from the question. So the earnings, which is the profit
So
after tax, it is
500,000.
2.5 million. Okay, 2.5 million minus preference dividend. What's the preference dividend?
375,000.
375,000.
Okay, 375. Then everything all over weighted average number of share, which is 11 million 412 500. So EPS is equal to, so what do you have as EPS?
0.1862. 1862.
0.1862. So if you want to put this one, in real sense, this is a naira because they said any per share, it is money. So if you want to pronounce this, what will you pronounce? Will you say is 0 naira 1,862 kobo? So for you to understand it better, you now multiply this amount, you multiply with 100. You multiply with 100 so that you can quote it very well. If you multiply with 100, so what do you have?
80.62.
That means it is what? 18 naira
52 kobo.
62 kobo, yes. So
18
that is how
62
we
kobo.
do it. So that is how we do the calculation. If you have it like that, you multiply with
Sorry,
100.
is this basic or diluted?
This is the basic.
Okay.
Basic is what the examiner asks you. Calculate the basic EPS. Is it clear?
Yes.
So if you see something like this, you able to do it very well and score the mark correctly.
By God's grace.
Yes, sir.
By the
Yes, sir.
special grace of God.
Amen.
Okay. Now let's check other things. Gradually we are progressing. Are we ready for me? Are you ready for
Yes,
me?
sir. Yes, sir.
Please, can you
Okay.
please help us to look it up? We want to see up there, sir. Up the screen.
Okay, hold on, please. Is it fine like that?
Yes, it's okay like this.
I be continue now. You are not charging your laptop. Oh, I don't want it to off. Oh.
I think one person said he wants to write now.
I'm done, sir.
Because I'm looking at your battery level. It's like 50%. Oh.
Okay, no problem.
So ID, sorry. Are we not making use of the 2 naira, the 2.50 and 3 naira?
No.
Okay.
There's having no business there. So let's look at um another example.
I was thinking we are going to do the diluted method.
No. We are still going to do it.
Okay.
So let's look at another example to see other way of checking this. And if we are giving something like 2 period, how we are going to go about that 2 period. Then when we finish that, we now think of how we are going to test for dilution. Are we there?
Yes.
Yes, we are.
So suppose May 31st, 2017, Adeyemi PLC made an issue at full market price of $1 million ordinary share. The company accounting year runs from January 1st to December 31st. The relevant information for 2017 and 2018 as follows. Twenty 2018 shares that person should move, please. Shares in issue as at 31st December 26 million shares, 16 million shares, profit after tax and preference dividend ₦7 million, 7 million naira, 6.6 million naira required. Calculate the EPS for 2017 and 2018. Stop. Are we set?
Yeah.
Okay. So, if you are to calculate EPS, remember that the formula for EPS, so that you know what to do. You write the formula by say EPS is equal to, who will remind us? EPS is equal to what?
Earnings
And
less preferential or profit after.
Okay.
number of shares.
Earnings
Reverend
Minus
dividend.
parent share.
Dividends, preference dividends.
preference dividend. So if there is a
Dividend
preference dividend question
divided by weighted average.
all over,
Weighted average. Okay,
Shares,
number
number
of
of
shares.
shares or
okay,
what number
of
of shares
number of ordinary share or Buddha
weighted
weighted
average.
average. Yes.
Average number of shares.
So as a result of that, we can now calculate our what? Our weighted
Hmm.
weighted average number of shares. Then let's do it together. Have we said?
Yes.
So number of shares
Yes, sir.
number of shares. So existing shares.
That's 26 million.
Existing shares. What's my existing share?
1
26
million.
million naira.
For which period?
Okay.
For which period?
For
That's
31st of May
31st of
2017.
May. 31st May.
What I'm saying is which period? Is it 2017 or
2017.
17.
2017?
Yes.
Okay. So for 2017,
That's 1 million.
you know, I said we should calculate the EPS for 2017 and 2018.
18.
Okay. So for 2017, what is our, what is it called? Existing share.
That's 1 million.
One word.
1 million.
So this is where I want to correct certain things. So we have to be very careful while computing for similar when we are computing for question like this. If you look at the question, I said suppose on 31st May 2017
Okay.
Adeyemi PLC made an issue at full market price of 1 million ordinary share, and the company accounting year run from January to 31st December. Now, the thing is, if you are computing, hello,
Yeah, with you, sir.
Hi.
if you are computing for 20, okay, let me do like this. 2018, sorry, excuse me, 2018 and 2017. Calculate the EPS for 2018 and 2017. That is, you are calculating EPS for 2018 and what's it called? And the corresponding figure for 2017. Sorry. So if you are calculating something like this, then you have to think of the share issue at 31st December. You know, they said the account run from 1st of January to 31st December. And you want to compute that value that you see here, this 26, this 26, and this 16, you know, the 2017 and 2018. I only just interchange it. So this is the 2018 that comes first. They calculate the EPS for 2018 and look at the number of shares you have as at 31st December. It is 16 million. Are we there?
It's not
Yes.
clear.
But
No, what
I'm
I'm
saying
saying is
26
this.
million here.
This is what I'm okay. Sorry. Let me adjust this thing. 2018, 2017. Okay. Do it this way.
Okay.
I will explain it better now. So I want to calculate EPS for 2018 and corresponding figure for 2017. So for 2018, I have the share in issue 26 million shares. Yes or no?
Yes.
Yeah.
So that 26 million share that I have. So for 27, you know, you have to 2017 will come before 2018. So this 2017, I have 16 million. Then the existing shares that you have here, the existing share that you have, it is what's it called? What is the existing share that you have? Hello?
Yeah, for which year, sir?
The
As the
existing share is
existing
1
share in
million.
2017. No,
1
10
million.
million. It's not 1 million. 10 million. Sorry.
Okay, the 10
10
million.
million.
Okay. You wrote
The
1 million before.
the existing share you have in 2017, it is 10 million.
Yes, sir.
Look at it very well. The existing share that you have in 2017, it is 10 million. Then, when they now said there is a new issue in 2017, you have 16 million. So, you know, in 2017 will come before 2018. Then this 10 million in 2017, the existing, plus the new issue in 2017, if you plus the two
will be
together,
the
what do you have?
2028,
That's
which will be
26.
26 million, which is 2018.
Hello?
26.
26 million.
Okay. So that 26 million, it is what you now have in 2018. Because in 2017, there's a system of 10 million, and the new share again 16 million in 2017. By the time you plus the two, it will now give you 26 million in 2018. Is it clear?
Yeah.
Hello?
It's clear. It's clear. Let's move on. It's clear.
Okay. Then, if it is clear,
Yeah,
so we can now move on and say existing share will be 16 million. So multiply by, you now prorate. So when you prorate, how many months is that? Because it is existing share, you now be 12 over 12. And I say it doesn't make. Yes.
So is it going to be the same
You
amount?
still have 16 million.
Yeah. Then the new issue. New issue will be, what is the new issue will be?
The new issue is 26.
26 million.
No. For us to make it to be 26, you know it is 10 million now. 10 million and 16 million. Give us this 26. So it is these two that you are breaking down.
So it's 10 million that is the new issue. 10 million.
Look at 10 million cannot be new issue now. Check it very well. Because okay, we'll put, we'll put the 16 million. So 10 million the balance. So multiply by how many months?
Yes, is it not 7 months? May, June, July, August,
7 months.
7 months.
7 months. 7 months.
Yes.
That is 7/12. So what do you have? Because this one is May, yes. May.
$58,333,333 naira.
50 what?
58 million.
58 million.
No, 5
Yes, at the
million.
end. Yes,
5
5
million.
58 5 million.
833.
37 million. 10. 1, 2, 3, 1, 2,
833.
3. Divided by
Ọdún.
333.
5 million 833.
333. 333.
333. Then we cast the value.
Okay. Yeah.
21 million.
21
21
million.
million.
21 million. 833.
833,333 naira.
Like this.
Yes.
Is it like this? So
Yes.
let's now look at this to check which one is the best approach for this. Now, if I want to calculate the existing share before the new issue, existing share before the new issue. My existing share before the new issue. Let me check. This is my existing share before the new issue. So
16
if I
million.
use this one, my existing share before the new issue, 16 million, right?
Yeah.
16 million. So multiply by, you know, the down one, the new issue is the 7 months, right?
Yes.
New issue. How much is the new issue?
10
So you now
million.
come here.
4 million.
No, we know, that's where I'm going to. So you now come here because this is 2017 existing before the new issue. You now come here and say what we call 2026. That is new issue in 2018. New issue in 2018, 26 million. For 2018, I want to check maybe the figure is the same thing. Then multiply by 7/12. Then if this 7/12, if this one is 7/12, then to make it 1 year, this one will be 5. This one will be 5/12 because 5 plus 7 it is 12. So let's calculate this one and check whether we are going to arrive at that same value. So this one will guide us whether what we calculated is right or wrong. You can just do it as a
6 million. 6 million
6 million
666,000
666,000
666 naira.
666. Okay, do the down one.
It's the same
26.
thing.
So when you check, it's the same value, Abi.
Yes, it will give us the same thing.
That
Same
one is
21.
what? That's
So that one will give
15
us
million
150,166,667. If you add it
466
together, it's
naira
going to give us that.
So 15
667
million, 15 million,
466 naira
466,
466. Okay, 667 667.
667. So once you add it, we have 2 million, right? 21 million, 833,
833333.
333. So obviously what we calculated from up is correct. So then we now move to EPS. And the EPS now, it is our earnings. EPS in the 2018. So what is our earnings of EPS in 2018?
7 million.
7 million.
Yeah.
All over number of what? Shares. What's the number of
Yes.
shares for that 2018?
I be sorry, I want to take you back. So
Okay.
this 16 million, the second method, right? I'm
Okay.
assuming we are taking it, we get the 5 months from taking from December to May. That's how we got the 5
Yeah.
months, right?
Yes, yes.
All right, thanks. Go ahead.
So EPS of 2018, then what is our number of share? 21 833 333. What do you have? Then EPS in 2017. So what's our
0.3206.
0 point? Multiply with 100. Let's see.
Okay. Okay, I'm coming. 0 point. Okay, 100.
Because I don't know what you have, but just multiply with 100.
32.06.
Eh?
32.06. 32.06. 32
That is
naira 6
32
kobo.
naira,
6
32
kobo.
naira 6 kobo. Then 2017, EPS in 2017,
6,600,000.
6 million.
600,000.
So you now go back to your question. That's the only logic that is here. So the issue shares in December, it is 16 million. So this is what you are using to divide EPS of that corresponding month. Because this value, let me give you the logic. This 21 million that you see as a number of share, it is inclusive of 2018. You get it now? Because 2017 will come before 2018. Then when you are doing 2017 separately, the number of share for that time, it is what? 16 million. As at that December. Hope is clear.
No, sir.
It's
Which
clear,
side is
sir.
not clear? 2018, this 21 million that you see in 2018, it's inclusive of
Okay.
2017. but we have to calculate EPS of 2017. Then the number of share for 2017 will be the one given to you from the question, which is the 16 million.
Okay.
So what do you have?
$41.25.
41 naira,
41
25
point.
kobo. 2 kobo.
You said what?
41.25.
41 naira 85
25 kobo.
kobo. So that is that. So let's now move to how we set.
Yeah.
Or you are still writing.
I'm set.
So let's now discuss what's it called? Diluted earning per share. That's the second type of EPS. Diluted EPS. So there are basic steps. There are basic steps in diluted EPS. One, are we there?
We are there. We
Yeah.
are there.
So one, when we want to test for dilution, the first thing that we also need to do is that we are going to calculate the weighted average number of shares for basic EPS. That's number one that you need to do. You calculate you will do what? One, hello,
We are with you.
okay. You calculate Hold on, please. So I'm back. So you have to calculate the weighted average number of ordinary share to the one we did under EPS. So you have to calculate the weighted average number of shares for basic EPS. That's number one. That's where the step that you need to follow while computing for diluted EPS. Number two is that you have to compute earnings. Compute for, let's say, equity earnings. Compute for equity earnings for basic EPS. Another thing that we need to do is to compute for basic EPS. Basic EPS. I think you understand the theory step. Because don't forget, if you want to calculate for basic EPS, what we normally do is what? Who can remind us? If you want to calculate basic EPS, what is the first thing that we normally do? Who can remind us? So that's what I did just now. If I want to calculate basic EPS, what is the first thing that I normally do?
Preference dividend all over. I mean, earnings minus preference dividend all over weighted average.
That one is
No, we
formula. I'm
calculate for
not asking
weighted
for formula.
average now.
God bless you. That's what I'm asking. If I want to calculate basic EPS,
We'll for
the first
calculate
thing
for
I would
weighted
do is
average.
that that is what I put as step one here. I'll first calculate the average weighted number of shares for basic EPS. I'll calculate equity earning for basic EPS because the question that I solved, it is given already. Then I will now calculate my basic EPS before I will now use that formula. That's the basic EPS. Meaning, if I want to test for dilution, then I have to calculate all this. What's it called? If I want to calculate diluted EPS, I have to calculate number 1 to 3. Then number 4 is to test. Number 4 is now to test. Alaji, are you there? Is now to test the what's it called? Convertible stock. Test for convertible stock. So if I want to test for convertible stock, then the way you can test for convertible stock is by way of using what is called incremental EPS formula. That is where you can test for convertible stock. You use what is called incremental EPS formula. And that incremental EPS formula, I will show you what to do. So test for convertible stock. And this testing for convertible to stock is by way of using what I mentioned, by using incremental
EPS formula.
Yes, incremental EPS formula. EPS formula. So that is that. Then after that, after you test for all this, then you can now calculate what is called diluted EPS. And diluted EPS formula is equal to, so after testing for all this one, you can now say diluted EPS formula will now be equal to any from EPS, that earnings, any from EPS, from that basic, any from basic, any from basic EPS. Are we there?
Yes.
Plus interest savings. Interest savings of interest saving net of past convertible loan. Interest savings net of tax convertible loan. I will show you everything. Convertible loan. So all over number of shares of basic EPS. Number of shares of basic EPS. Number of share of basic EPS plus that number of ordinary share in excess for conversion. For conversion. So this is how you get your diluted EPS. So let me now give you, let's walk through some question under diluted EPS. I'm not sure that we can finish this thing tonight.
If we cannot finish it, why not let us start this question when we will be able to run it through?
Okay.
It's my suggestion. Instead of starting halfway, since we have stopped where the formula is, by tomorrow, if we want to continue tomorrow, we could just pick the question, then just flow continuously. Maybe for other people have opinion, sure, I'm just saying.
So others, what do you think we should do?
It's a good one.
Or we should just try and solve like one question, then we continue from there tomorrow. Any do you have any suggestion on that?
If we are going to be able
Anyone
to
is
finish,
fine.
if we will be able
You
to
say what?
finish one
So let's
question, let's just start from there. It is possible that if we
So let's
Cannot
just
finish
do it.
it. I don't.
Okay, let's continue from here tomorrow then. Let's continue from here tomorrow.
Is it that if we give us question now, we won't be able to finish the question?
Yes, that is my
Obviously, before you
because
explain this
for
this
dilution,
information,
is that what?
I say obviously it will take a lot of time before you can explain this dilution formula. So I think it should take a lot
Yes.
of time.
Mhm. So let's do it tomorrow. The thing is what I want to do there is that of incremental EPS formula, because I've explained the step that we need to take while computing for diluted. I said there are basic steps in diluted EPS. One, you have to calculate average weighted number of shares for basic EPS, the one that we did before. You compute the equity earning for basic EPS. So you know sometimes they will give you the earnings, but sometimes you calculate it. I think the one that we did before, the earnings is given, then you now calculate basic EPS, our normal basic EPS. Say earnings minus preference dividend, if there is a preference dividend, all over number of ordinary share or weighted average number of shares. Then 4, you now test the convertible stock. And how will you test the convertible stock? Is by using incremental EPS formula. So this incremental EPS formula, it is what I need to explain most. So that's what I said. We need to continue from where we stop. I think from the beginning we gain a lot from, say, the benefit of EPS, the limitation of EPS, the type of EPS, and the application of EPS. Then before we now move to the calculation part. So any questions so far?
IB, sorry. IB.
Ask your question.
Please, can you please help me to recap the benefits and limitations, please?
Uh,
I didn't get
when
that.
I'm explaining it, where I
I
said one
don't
of
know.
the, no problem. I say one of the benefit of any per share is that we can use it to measure financial performance between the two companies. That is between the two entities. We can say entities, we can say companies. So any per share is good enough to measure financial performance between the two companies. And I also said any per share can be used to assess what is it called, the profitability performance of the entity over time. You can use it to assess the profitability performance of the entity over time. And we also said it can be used for, what is it called, for investment decision. You can use it for investment decision. And we also said we can use it to predict the future profitability of an entity. You can use it to predict the future profitability of an entity. And I also said it is important in terms of the a share price of an entity, because it is it is important because it brings impact. There's an impact on the share price of an entity. I think what that is what I talk about. And I also said we can use it to determine the what's it called, the market price of shares. You can use it to determine the market price of shares. So when we now talk about the limitation, we said EPS, it is subjected to window dressing and the creative account. I say what I mean by window dressing is that for manipulation, you get it now. So as a
Yes,
result of
understand.
financial manipulation, so EPS is a what is there's a limitation on that because it is subjected to what window dressing, window
Understand.
dressing and the creative account as a result of what financial manipulation. And we also said it is historical in nature and may not be suitable for what for future prediction. And don't forget, in the important, we say it is good for future prediction, but obviously there's a limitation to that because the EPS deal with what historical figure is deal with historical in nature. And we also said the EPS is not a complete tools, is not a complete tools for investment analysis uh, because it cannot provide information for liquidity position of the entity. It's like unlike ratio analysis. Ratio analysis is good for investment tools. Is a complete investment tools because we can use it to determine the liquidity position of an entity. That one is a for ratio analysis, but for EPS is not a complete investment tools. And we also said EPS can result to what misleading if the impact of inflation is not considered. So when you are preparing your financial statement and you are not consider the inflation, so EPS can mislead you. You get it now? It can mislead. So that is what we explain. And we talk about the type of
Okay.
EPS. The type of EPS can be basic EPS and also
And
diluted.
diluted.
On the basic EPS, by the grace of God, tomorrow we are going to look at the diluted EPS.
Oh, thank you, sir. Thank you, sir.
So